Well, I'd love to say that our clients are diversified across the board in what they're buying, but actually the tale is very much that tech remains in favour for our clients. Investor confidence is down a bit. This is the third month in a row that we've seen investor confidence fall in June. A lot of that is to do with the macroeconomic rather than the markets. So there's a lot of talk here about interest rate decisions in London, a lot of talk about the general election. We're getting a lot of incoming from our clients, and we're discussing as a research team about the impacts of the general election. But in terms of trading, despite the sell-off in the last couple of days, Nvidia is still double what it was 6 months ago. Tech is very popular with our clients. Tech, India, because India has done so well, again, in the last year, particularly with the re-election of Modi, that's given some confidence back to our clients. And it's tech, India, US, and some global equities as well.
Emma, you mentioned the politics here. Is this anything other than just noise around the broader themes of investors wanting to own technology and also playing the first interest rate cut story from the Fed? Is the politics here just a little bit of cloud cover that investors need to see their way through?
I think, some of it is sentiment, right? Some of it is uncertainty. We're now a week away from election. It's election fever very much here in the UK. But actually, we're beginning to see now from the parties what their main policies are. And there are implications for certain sectors. So if we look at Labour, because that's who's significantly ahead in the polls, there is a divergence between Labour and Conservative, the two major parties, on a number of factors, not least around energy and the carbon transition. So we actually think there are a couple of sectors, including energy. And it's interesting to hear you talk about energy rebounding the last couple of days, which could actually do well if the polls were right and Labour were to come to power. Less so traditional oil and gas and more those businesses that are investing in the carbon transition and investing in renewable energy. We don't expect, given Labour's manifesto, any new major oil and gas licenses to be granted. But those businesses that are either small and investing in the transition, investing in electrification of the systems, or indeed large and have a diversified portfolio which has a mix of kind of fossil fuels and renewables, we expect them to do well. And indeed, there are other sectors too that we expect could be impacted by an incoming Labour government. Water and utilities is one of them, and that's actually one that we're negative on. We have the 5-year Ofwat's, a regulatory review that's due in July, and it has been a sector that has had significant negative headlines. Investors like it because they kick off a really dependable and quite high dividend yield, but actually we do think it's a sector that will come into focus for the Labour government. And finally, house builders. We have a housing shortage here in the UK. It's the same story across much of Europe and the developed world. And Labour have indicated that they will do something in terms of house building. And whenever we see a pledge from whatever government of whatever flavour to do more in terms of house building, then we do see a ramp up in the house builders. And those businesses tend to do well, obviously, when someone makes a commitment at number 10 in Parliament to build more houses.